Hello, hello, hello. How are we doing, everyone? Hold on. OBS just had an update, so if you guys could let me know that you guys can see the dollar index and audio is coming through good. Curtis, thank you, Curtis. Much appreciated. Cedric, Julian, thank you. High speed trading, much appreciated. Rich, thank you. All right, happy Sunday, everyone. Hope we're all doing good. Hope you guys had a relaxing weekend and looking forward to getting back to business. Hello, Anita. Hello, hello. Thanks for joining us. Denisha, we're glad to have you. Ahmed, hello, Dylan. Good to be back for the last time this year. Enjoy the holidays and looking forward to the mentorship as always. Thank you for joining us, Ahmed, and I wish you a good holiday season as well. Electron, Moralitos, Michael, hello, hello. Rich, my man, hope you're doing good, brother. Lyndon Cussy, first time joining. Looking forward to this. Glad to have you, my man. All thanks to ICT. Absolutely. Absolutely. Wishing you all profitable weeks ahead. Olawale, happy Sunday. High speed trading afternoon, my man. Glad to have you. Frank, hello, Dylan, everyone. And precision analysis. You know it, brother. You know it. Doobie, greetings all. Glad to have you. Christopher, my man. Good to have you. All right, awesome. Sounds like we got a full house today. Christopher, what are your plans moving forward after today's stream as far as content goes? Appreciate the donation and the gesture of kindness, Christopher. Much appreciated, my man. So moving forward, I may still do a little bit of trading here and there. And then if I get the opportunity, I'll definitely be doing some live streams with you all. But, outside of this week going into the holidays, again, volume is going to be dropping off significantly. As someone pointed out in the Telegram, glad to see we have a lot of educated, informed people sharing what they're thinking and what they're seeing, and I greatly appreciate that. But yes, hedge funds, institutions, they're offloading their balance sheets. We're going into the last part of the year, so the volume will still continuously decline. Will there still be opportunities? Will the market still be moving around? Absolutely. But I'm going to be using these times to enjoy time with family, backtest, study, and do things outside the charts. And then if there are opportunities, I will take advantage of them if I see them. As far as content goes, we'll still be active with content. We'll still be sharing the usual analysis where we send the setups that we see that we take advantage of and use that as teaching opportunities. So if you guys like that, we're seeing a lot of feedback on the socials and everything that is helping you guys. So we'll definitely continue doing those things moving forward. And again, throughout the holiday season, maybe after December, let me see if I got the dates right. I think it's December 4th is when we get into the first trading week of December. I believe that's after the weekend. So I may do a couple live streams with you guys, hang out on YouTube, but again, not looking to push it a lot, really taking it easy. Crushed it these fall months, as we discussed in the summer, as we figured we would do. So I'm happy. I'm content with where I'm at as a trader, as an analyst. So I'm going to be taking it easy and then using this time to get away from the charts. Because as you guys know, come January, it's going to be all work, no play. So I'm going to be taking that time to decompress, get everything organized for that, for the clients that I'm going to be having to be responsible for. And I'm going to be getting everything prepared for that. So that's what my plans are moving forward, what I'm going to be doing. So with that, let's go ahead and get into the charts. So hopefully that answered your question, Christopher. Greetings from Zambia. Glad to have you, Demi. Cyclops, hey Dylan, I trust you're doing great. I do have a feeling this week would be lovely. Looking at the yield, seeing the SMT between 5, 10, and 30, and also T-bonds, SMT present in them. Yes, sir. Yes, sir. I'm looking at those same things as well. And again, we'll sort out all those details. Mo, on it like white on rice. You know it. Greetings from Mexico. Greetings, greetings. Thanks for joining us. David Labard, last week you said you were a scholarship athlete. We got to know what sport. Basketball. Basketball. I'm a hooper. Three-point assassin. So had to switch gears from sniping threes on the court to sniping entries in the charts. So Lindonoski, quick question. How do you know when to stay out of the market where it's not good conditions to trade? experience, but there is an extensive protocol that I have that I teach whenever I'm training people as to when you want to avoid it, when you want to be pushing it, as there's a lot of nuances that you have to understand and consider. Again, just spending time with the markets will teach you over time. Again, it's not something you're going to learn in, a week. It can be taught to you in a week, but the experience is really going to be that teacher. Latrice, hey Dylan, you ever trade Forex? I used to. I used to trade Forex much more, but I stopped. And then as you can see, the past year or two with the volatility in the Forex market, it's been abysmal. It's been abysmal. I mean, there's opportunities on higher time frames in my opinion, but the lower time frame for Forex is just not it in my opinion. When I can go into stock indices and it's just beautiful clarity week in, week out, and the intraday price action is really clean. And I just really haven't been seeing that in Forex, so I've kind of stepped away from Forex and have completely taken my attention to stock indices. So I'll go ahead and get to some questions after. I'm going to go ahead and get through the analysis for today. Today's is going to be brief, straight to the point as always. And again, I'll take some questions towards the end and get everyone the clarity they need going into this week. So with that, let's go ahead and get into the charts. But before we discuss that, I do want to touch on the economic calendar briefly. So going into this week, we have no news Monday. So Monday is going to be a low probability day. So to answer your question for the gentleman, or I believe gentleman or gentle lady, I'm not sure. I can't tell with the usernames all the time. But Monday, low probability day. Let's go into why. Large range Friday, so huge range expansion. There's no news on Monday, and there's CPI. So that is a triple whammy for why we do not want to be trading Monday. Will there be movement? Will there be scalping opportunities? Yes. But is it going to be a high probability trading day? Probably not. So that's not the day I'm going to be even wasting my time on the charts. So there's a small example to answer your question. So after CPI Tuesday, after 9:30 is typically when I wait for the dust to settle, wait for the manual intervention to wrap up. And then after 9:30, I'll be looking for opportunities Tuesday through Friday. There's high impact news Wednesday. We have PPI. Thursday and Friday, there's orange medium impact news drivers. So those are all going to be good trading days. And then this is really going to round out my week ahead of the holiday season. May do a little bit here and there in the first 2 weeks of December, but it's not something I would count on. So we'll see where we're at then. But for right now, let's go ahead and take advantage of these opportunities we have this week ahead of us. So with that, let's go ahead into the dollar index monthly chart. So last week, I took our attention into this monthly inefficiency here, saying that if we were going to remain bullish, I would want to see a reaction from this range. Again, we're not dealing with ambiguous zones. We're dealing with very specific levels, which was the consequent encroachment or the midpoint. And as you guys can see, we hit that, and then we're now starting to rally higher. So another point I touched on last week was that if we are going to continue bullish, I would want to see this candle flip from a bearish down candle, black, to a blue up close candle, anticipating that power of three, which is that open manipulation expansion. So I like the reaction we're seeing in there. There's a few more confirmations I'm going to want to see moving forward, but we'll sort that out in the lower time frames. But for right now, I do like the price action that we're seeing on the monthly chart, and I do like the reaction from that midpoint and how we didn't even trade down into the lower portion. So let's go down into the weekly chart. So that same monthly inefficiency, the blue rectangle. And now we're seeing that weekly chart here. So again, I also said that it was reasonable to see a retracement. We've seen this market go straight up since we've called this bottom below the equal lows. And it's reasonable to see the market retrace. Again, markets just don't go straight up. But then remember where I qualified how far we could retrace. I said we could trade down into this monthly inefficiency and this bullish breaker here, which is low, lower, low. Extend that through. I'm not going to do it on my charts because then it would clutter things up, but I'm watching these key levels. And I said if we were to rally, we'd have to do it from there. So we see we opened, traded lower, took out previous week's low. So manipulation, and then the expansion higher as we were expecting. So what I do like is how they left these relative equal highs here and here, and then these equal highs here. I do believe that we have unfinished business above those highs, and I'm going to be going into my trading these next couple weeks expecting higher prices into these key levels. And again, given the economic calendar, I will be expecting quite a bit of animation in price delivery for this week. So that's it on the weekly chart. Let's drop down into the daily and sort this out. So quite a few things that I'm taking our attention to here. We'll touch on that in a moment. But you guys do remember, again, I touched on the consequent encroachment of that monthly fair value gap. But further refining it, we looked at this wick. We split that in half, extended that through. And I said I would want to see a reaction from there. And it was really nice to see, calling the exact turning points on all these markets. So we hit that and then aggressively rallied higher. So remember I told you guys that this was not a fair value gap like we're going to go into in short. We're going to go into it, and then the fact that we closed above it, that was the confirmation that told me we're bullish. So again, it's not just, okay, shift in market structure, fair value gap. There's more narrative you have to understand. So why didn't I look at this as 2022 model, which is we drop lower, shift market structure, sell short the fair value gap? Because the higher time frames are going to be parent to the subordinate lower time frames. So you want to take that away. How do you trust break a structure or a stop hunt? I just gave you that right there. So looking at this here, we closed above it. That was a bullish signature I wanted to see. I didn't like to see how the bodies were staying below it. But then once we got that decisive close above this gray inefficiency here, that told me that the market is bullish. So if we are to remain bullish, the market should stay above this inefficiency. If we get below this gray inefficiency here that I have labeled here, if we get below that on a closing basis, my attention is going to go to this sell side here and these equal lows here. However, I'm not favoring that. I'm still going to be looking for higher prices, again, as long as we remain above that. So a valid first target on this week will be this void here where there's no trading. That'd be a valid first upside target. And then how we trade there will be significant because we have this last up close candle, the void there. I would want to see us trade to it and through it. And then how we trade there, assuming we get above it, I'm going to expect to run above these equal highs for a nice second target. And then again, if we get animation through that, we have that weekly high all the way over here that we've been looking at for quite a while now. So I believe that's all I had to cover on the daily chart. Let's drop down into the 4-hour. So again, refining this further, in the previous week, we had this down close candle or bullish order block in here. So I said that as long as we remain above that, we're going higher. I said if we got through it, we'd look for lower prices again, but I said I'm not favoring that. Again, I don't give you guys both sides of the market. I tell you guys very clearly where I think the market's going, but I also give you guys an invalidation level because again, that's what professionals are doing. So seeing that, we found support at that 4-hour bullish order block, which also aligned with what these other 3 key levels I shared with you guys before. And again, I touched on how nested PD arrays is a significant algorithmic reference point. And then again, we randomly rallied from there. So looking at this price action that we're in right now, I don't like to see how anemically we're rallying. If we are going to rally, I want to see a decisive move higher. I did like to see how there were equal lows here and here. We traded lower, cleaned up those lows, and then aggressively displaced higher. So if we do remain bullish, we should not get below this swing low. This swing low now becomes an intermediate term low, classifying market structure. Again, we don't do it after the fact. We do all this real time. So intermediate term low here, we should not get below that. If we do, then again, I'm okay with being incorrect. I'm not here to be right. I'm here to make money. So if we do get below that, then I'm going to shift gears and then look for the sell side here and these equal lows here. Again, I'm not favoring that though. I do suspect that we will find support in this bullish order block to form some type of low of the week. And then I'd want to see an aggressive expansion from these levels here into the targets I shared on the daily chart. So that's what I'm going to be looking at on dollar index. So I will still be expecting risk off in the markets. And again, we'll further qualify this with the bond market as we always do. So monthly chart for T bonds. So again, we've been bearish, seeing bearish order flow really this entire year. And then we finally got that repricing below these equal lows that we were expecting for months. So after we took that out, again, that's external range liquidity. So I covered you guys how to be reasonable for the market to want to come into some measure of internal. Internal range liquidity is just liquidity that's inside the range that we're trading in. So we ran up into this internal range liquidity, and then I said we'd have to monitor how we trade inside this monthly fair value gap. So I like to see how we hit it, and then we saw a rejection off that. That tells me that this market is weak and we're likely going to see a sell-off from these levels. So again, as long as we remain below this monthly fair value gap, I will remain bearish. And again, I qualified this as a breakaway gap, saying how I don't even want to see us trade up to there. Typically, people that aren't as versed in these concepts, they'll say, well, that's an inefficiency. Shouldn't the market go up there? Not if there's a specific criteria in the market, which is, again, we're extremely weak, we're exceedingly bearish, and I don't even want to see that inefficiency traded to, because then that would communicate to me that this market is exceedingly weak. And then again, another algorithmic signature that I like is how we were unable to even trade up to that midpoint. So unable to reach that, again, indicates this market is exceedingly weak. So dropping down into our weekly chart. So we had this weekly inefficiency on our chart from last week. I shared that this would be significant how we traded there. And I like to see how we opened, traded higher, took out previous week's high, and then we saw a sharp rejection lower. So I do want to see us remain below this weekly inefficiency if we are going to continue seeing lower prices in the bond market. And then again, this is further confirmation for higher prices in dollar. So it's just economics 101 at that point, where T-bonds are going to be inverse to the dollar. So again, I like to see that reaction there. And then given that we already traded up into this internal range liquidity, cleared out the stops above this swing high, I'd want to see the market aggressively reprice lower below the sell side here. Will it do all that in 1 week? No, but as long as that's the direction we're trading in, if the market's expanding in that direction, again, there's room for profitability, looking for movement as long as you're in the correct direction. So longer term draw, we're going here. And then through that with animation, we have this monthly fair value gap. I don't think I took our attention to that. I mean, we've had it on our charts for months now, but just for completeness sake. So this monthly inefficiency here, animation on the downside, I like this is a target for us to reprice into. So let's go all the way down to the daily chart. Refine this further. Again, this is all from previous weeks. And again, we were all over this market. So I took our attention to these equal highs here and here. Why those highs? Anyone that was short, fund level traders, hedge funds, they're short. Where do they trail with their stops? They have retail minded perspectives. Yes, they manage a lot of money, but they still have no idea what they're doing. That's why the average lifespan of a hedge fund is only 7 years. They don't make it in this business because they're cannibalized by that smart money trader. So looking at these equal highs here, there's obvious liquidity above those highs. So seeing that we got above this fair value gap, which is what I told you guys, that if we we're going to be weak, we'd have to fall from this fair value gap. But the fact that we closed above it then told me again, we're going to run for these highs here. So seeing that run higher in T-bonds makes sense why we saw that drop in dollar. So again, once you understand all these dynamics of the marketplace, we're not surprised. We're not caught off guard by anything. We're anticipating it before it happens, which is where you want to be as an analyst. So looking at these equal highs here, we cleared those out. And then last week, remember, I took our attention to how we trade there will be significant. So here we have Friday's high from the previous week, and then we had equal highs there. So we traded back up above it, and then we saw a nice rejection lower. So I want this to be an intermediate term high. I don't even want to see us get above that. We cleared out the stops. We traded lower, created a bearish order block in here. We hit that opening price and rejected lower. So for me to remain bearish on T-bonds, we have to remain below this bearish order block. As long as we remain below that, I will continue looking for lower prices. For a first target down into this inefficiency here. Through that, I like this inefficiency, and then animation through that, we will use this as inversion. So again, qualifying inversion, fair value gaps, real time. We want to get below it, use it as resistance, like a ceiling, and then smash lower, running for these clean lows in here. So that's what I'm going to be expecting in T-bonds. And again, if that does materialize, we will then see that lift in dollar that we're anticipating. But again, if we get above this bullish order block here, trading above that, that would invalidate my bias, and then I would look for higher prices. And again, just simply get in line with what the market is showing us. So that's what we're looking at in the T-bond market. Let's go on ahead and look at the yields. So again, yields have just been on a tear. And again, we've been all over that this year as well. So yields rallying higher again, which is why we've been bullish on the dollar. So again, it's reasonable to see that retracement running on these stops and these equal lows in here. So we see that the 10-year made a lower low here. We see 30-year made another lower low, but we do see the 5-year failed to. So let me go ahead and depict that. I know we have quite a few new people here, so I'll go ahead and draw it out. If you're going to do it right. So 5-year did not make a lower low. 30-year did make a lower low here. 10-year did make a lower low. So seeing how one of the yields in the triad, which is 10, 5, and 30-year yield, was bucking the trend or failing to make that lower low, that Kraken correlation is algorithmic. That tells me that, or it's a signal to smart money traders that this market is about to see a shift. Again, we've been trading lower. We cleaned out these equal lows here, which is to be expected. Anyone that was long, where's their stop as a retail-minded trader? So again, I'm not always bringing up the retail-minded trader to pick on them. Again, they already have a hard enough time in these markets. But the reason I'm sharing that is because our trading strategy is based off how these retail traders see the marketplace. So if their stops are here, the market's going to run for those stops aggressively. And again, we see that repricing there. So now that we've cleared these stops and then we see an SMT at a critical level, that tells me that the yields are going to continue rallying. And again, I've already shared the targets on T-bonds, so the yields would just be the inverse. So we're looking for higher prices on yields, which again will put lift in dollar because yields are what give currencies their value. So looking at bonds, let's go ahead into the Forex market. The pound delivered handsomely this past week. So let me go ahead and clean this up here. Sorry. That's my annotations for my journal. Okay. So looking at euro dollar, we'll look at euro and pound. That's as far as I'm going to go into the Forex market, unless again some member questions want to see some other Forex pairs sorted out. So looking at this monthly fair value gap here, I shared that we're trading into that. I'd want to see the market reject and go lower. So we did hit it, and now we are pulling away from that. So I wouldn't want us to trade back above this if we are to remain bearish. If we do, then again, I'll just have to get in line with what the market's showing me. But again, I'm not favoring that. I'm favoring the market rejecting from here, selling off, and running for this huge imbalance here. And again, the sell side that's building in below this swing low. So let's go to pound. So pound's been much more weak. So pound did trade up into this inefficiency, was unable to even trade up to the midpoint, and then we rejected. So pound is going to be much more weak than the euro. And then looking at euro pound, we see that confirmed here. I didn't even need to look at euro pound just by looking at the price action. And doing this for many months, many years, I'm able to already know this one's going to be more bullish. But again, looking at the signatures and price that tell us these things. So again, we're not caught off guard. We're not surprised by anything. We already know what we're expecting. And again, we're meeting it before it does it. So we traded into this inefficiency, and then I'm qualifying this to you guys as a real-time sell-off. How we should trade into this and then sell off and run lower. And again, the fact that we didn't even trade up to that midpoint indicates to me that this market is weak. So I'd want to see us aggressively run for this sell side here, these lows, and then this low here, longer term. Because we're already getting late in the tooth in the Q4, I'd prefer to see us run here before January 1st, but we'll see. It could do it going into December, maybe need into January to get into these lows, but again, I'm still going to look for an expansion lower. And again, the price action will dictate to us when it is that it's going to want to trade there and how fast. But again, liking these signatures here. So pound will be better for shorts than the euro. All right, so let's go to euro. So again, there's that monthly inefficiency that we were looking at. So again, we traded into it and we saw a nice rejection lower. I have this bearish breaker here. I don't have it extended through because again, it would clutter up the chart. But again, we're trading inside this monthly fair value gap and inside this weekly bearish breaker. So I'd want to see a sell off from here and again run for these equal lows here, and then eventually get down into this sell side liquidity, or not sell side liquidity, excuse me, buy side imbalance, sell side inefficiency, or fair value gap. So that's what I'm going to be looking for in euro dollar. And same thing in pound. So looking at pound here, we traded up into this buy side. Well, that's buy side on a daily chart. So let me go and take that off. So we traded into this weekly fair value gap again, which is also a breaker. We see there is a, let me go back up to the monthly chart. Actually, there's one other thing I wanted to confirm. I'll get back to that breaker in a moment. Monthly fair value gap here, look at the bodies respecting. What level is that? Consequent encroachment. So we have this midpoint. We extend that through. Look at the bodies respecting that. Again, that's what told me this entire summer into the fall months that we'd be looking for lower prices. All these algorithmic signatures here, again, are continuously communicating to inform traders what these markets are going to do ahead of time. So again, seeing that the bodies were unable, I mean, look at the precision there. Beautiful. Never gets old. Seeing how we're unable to even get above that, that indicates to me what? This market is exceedingly weak. And again, we were all over this sell-off the entire year. So going back down to that weekly chart, again, we traded into this inefficiency here. And breaker. Why is that a breaker? Again, it's a high, higher high. So this last down close, we'd want to extend that through. Again, I'm not doing that because it'd clutter up the charts, but you want to have that on your charts. So seeing how we trade up into this inefficiency, breaker, hit that, sell off. And again, wasn't even able to trade up into the premium end. And then we got that rejection lower. So this is a daily level. Let me take that off here. And then we close down below this inefficiency here. So we should not get back above this red rectangle or city, sell side imbalance, buy side inefficiency. I would not want to see us get above that if we are to remain bearish. And again, I'd want to see an aggressive expansion lower for these equal lows here. You want to split this wick in half, get a midpoint. So we'll just call that 1.93. And then through that, we have this sell side here. So again, as long as dollar remains bullish, I will be looking for these setups to materialize in the currency market. All right, so daily chart for the euro. We traded higher into this buy side here, so running into this swing high, and then we saw a rejection lower. So again, euro isn't as weak as pound, but I do like to see how we traded into that, and then we rejected lower. So these clean lows in here, that looks a little too clean for my liking. So I'll suspect the market would want to run into that. As a first target on the downside for euro, we have this inefficiency here. Through that with animation, I like these equal lows, and then this sell side here, longer term, going into the next couple weeks. So we'll go ahead and get through this pretty quick because I already covered the higher time frames. So buy side here, we trade up into that, rejected that strongly. This inefficiency here, again, not a long, not 2022 model, shift in market structure, buy it, we're bearish. Why? Because the higher time frame. So this was not a shift in market structure. This is a stop run in my opinion. Trading lower, closing below this inefficiency, telling me what? This market's weak. So it's an inversion fair value gap. We would not want to see the market get above that. So we're going to use this as resistance, not be able to get above it, and then aggressively expand lower for these equal lows in here. And then zooming out, we have this inefficiency. Again, if we get animation through these lows here, we have this fair value gap in here on the downside. And then I'd want to see that as a downside target. And then through that, we have the sell side here. So that would be the target that I'll expect for us to see within the next 3 weeks to month. So, all right, so I believe we've sorted out the currency market. Let's go ahead into stock indices. So looking at the NASDAQ. So actually, before I get into the indices, I do want to touch on a few things. Indices are bullish and dollar is bullish as well. So right now we have an unsymmetrical market. So the markets are not moving symmetrically. The indices can move along with the dollar, which again, we don't prefer to see, but it can do it. It's done it before. And then if you backtest it, you'll see that it's done it. Eventually though, if dollar continues rallying long enough, we will see the stock indexes bend a knee and drop lower. But again, these are highly manipulated markets. Everyone wants to see the stock market crash. Why? Because again, these markets have no real bearing on reality. We should not be seeing the stock market trade at these multiples that we're at right now. But again, these aren't real markets, so we have to trade the fakery. So again, looking at NASDAQ, again, I just wanted to put that little disclaimer out there. So looking at NASDAQ, again, we have to trade the price action we're seeing. So this monthly inefficiency, we traded down, found support at that midpoint, and then we see an aggressive rally higher. So given what we're seeing, it wouldn't be too much of a stretch to see this market run above this high here. And then looking at the continuous contract where we have all this data here, if we get animated through this high here, we will likely run for these highs and make all-time highs on the NASDAQ. Again, there's a lot of things that have to happen for us to trade to those levels. But again, just sharing what I'm looking at on these time frames. Could we just sweep this high, reject, and go lower? There's many possibilities, but I'll keep you guys updated every step of the way with what it is I'm looking at. So again, we hit that midpoint of that inefficiency and we're rallying aggressively. So again, these are signatures that tell me this market is reaching somewhere with speed. All right, so NASDAQ. All right, let's go to E-mini S&P. So again, looking at the continuous contract, we have this down close here, bullish order block. Why not this one? I like this one. It has a lower close. So when you're trying to determine if this is the order block or if this one is, we use the one with the lowest down close. So looking at the body, we extend that midpoint through. That's mean threshold. So that price level is 4122 and a quarter. So looking at the low of this candle up here, 41.22 and a quarter. Again, nothing's random in these markets, folks. Nobody is, these entities are not risking billions of dollars on Mickey Mouse inverted head and shoulders. All right, that's just not the truth. No one's risking that amount of capital on indicators Bollinger Bands, none of that shit. All right, so it's doing these things here, these algorithmic signatures. So again, it hit that level to the point, and then again, we see that aggressive rally higher. So trading, what I'm seeing in the charts right now, we're looking at higher prices on stock indices. And again, we'll sort this out further as we go through the time frames. So weekly chart on the NQ. So we have a bullish breaker here. Let's actually zoom out, look at the larger time frame. So low, lower, low, this high, we extend that through. Again, not support and resistance. This is the breaker because it's this very specific signature that we look for in a breaker. We hit that level and then we aggressively rally higher, which is again why I took our attention to this swing high yesterday. Or not yesterday, excuse me, last week. So last week we did take our attention higher, and then we were looking at this swing high, and that delivered handsomely on Friday. So seeing how we repriced down to the low end of this weekly fair value gap like we were expecting when the market was bearish, and then we see an aggressive expansion higher. This candle closed above this inefficiency, telling me what? We're bullish. So am I going to impose my will and demand this market go lower, or do I get in line with what the market's showing me? Obviously, we're going to get in line with what the market's indicating it's going to do. And again, we just wait for it to show its hand. So seeing that we're trading above this with speed, closing above it, again, not just hitting it and rejecting, this market is indicating to me that it's wanting to reach somewhere in a hurry. So my attention goes to this buy side here. And then if we animate it through that, again, we may need to revisit these highs here. So that's what I'm going to be looking for on the NQ. Let's go to current month contract. Let's drop down to that weekly chart. So again, we traded lower into the sell side here, repriced that low, and then we see an aggressive repricing higher. Again, last week I took our attention to this previous month's high here. Let me go and take this text off. You guys already know what that is. So that's the previous month's high. So we traded up into that, and then look at the price of that high right there. The green, 4430 and a half. The closing price up here on this candle, 4430 and a half. So again, calling this level before the week even started printing, and then we closed on that. Again, nothing's random in these markets. Everything's controlled, it's scripted to the tick. There's no variability in terms of randomness. All these things are controlled extremely precisely. So again, we open, we trade lower, we hit this down close candle, hit that opening price, bullish order block, and then we aggressively expand higher. So on the upside, what I'm going to be looking for is this inefficiency here, seeing that that's really the only level of interest higher that I can see on a weekly chart. So we have the remaining portion of this down close inefficiency. So that would be a upside draw for the E-mini S&P. For longs, NASDAQ would be the better asset to buy for stock indices, again, because it's showing a willingness to want to rally. So looking at the relative strength leader for right now, it's NASDAQ. So if I'm going long, I'm trading NASDAQ. If I'm going short, I'm trading S&P. I get asked all the time, how do you know when to switch? You guys see me sometimes trading NASDAQ, sometimes trading S&P. How do I know? It's these things right here. Again, it's nothing you're going to learn in a 30-minute session. It takes time and experience. So log that in your notes, log it the next time, and then in the future, you'll know exactly what it is you're looking for. Again, it just takes time. So daily chart for NASDAQ, again, breezing right through. So again, I took our attention to all the bullish signatures here. Let me go ahead and take that off so we can see this more clearly. So again, closing above all these key levels here, showing no respect for it. So what does that tell me? Market's going higher. So I took our attention to this buy side here, again, using the quarterly shift IPDA data ranges. So again, we look back 20 days. Here, that's the high that's in that range. We look back 40 days. This is the high that's in that range here. So again, this is why I'm expecting us to rally into these highs, because the open float above those levels. So looking at this here, the previous week's trading, very bullish close on Friday, and then we rallied higher, stopped just short here. So look at Thursday's trading, how we stopped just short. Let me take the crosshairs off. So we stopped just short here of this high, and then we traded lower into this inefficiency. What's occurring there? There's already a lot of liquidity there. But the fact that they trade above it and then drop it off, what does that do? That builds in more liquidity, more victims for smart money to cannibalize. So it leaves more liquidity there. They reprice it lower into a buy side imbalance, sell side inefficiency, which again, we're going to look to do what? We're going to look to buy it. Why? Because we're going higher. So we trade into that. Look at the bodies respecting that beautifully. Again, communicating to us what? This market is bullish. You guys want to see another freak act of precision? Remember what I shared last week, that if we were to remain bullish, we would use this as a breaker. So remember, just like we qualify inversion fair value gaps real time, you guys see me do it live and you see me do it on these higher time frame daily, weekly charts. If we're going to go higher, I'm already anticipating this being a bullish breaker. I'm not like retail. I don't need to see us trade above it, use it as support, and then rally higher. I'm already anticipating these things before they happen. And pretty soon you will too. So extending this breaker through, remember what I shared last week, that if we're going to go bullish, we would use this as a breaker as support. So extending that through, and again, qualifying this on Sunday, we want to extend this breaker through. I'm going to take that level off for now. Put that there. Look at the bodies respecting that breaker. Here. Called this before we even opened this candle here. I shared that this would be support. And then look at the bodies doing that. So when I'm buying NASDAQ on Friday, all these factors are being factored into my analysis. And then again, we see those equal highs here and here. Support at these key levels, and then it toasts those highs. And that's exactly where I'm looking to buy into. So then again, we see that rally here. So let's go ahead and take that off because again, it's going to be a lot of annotations. But again, we have this inefficiency. We trade into it, use it as support. So moving forward for the stock indices, for me to remain bullish, we have to remain above this bullish order block. So this is the down close candle. We should remain above this down close and breaker. So extend that through. You want to have these levels on your chart. So as long as you remain above the bullish order block and the bullish breaker, I will be looking for higher prices, specifically this high here and then this high there. And then again, animation through that, we have this inefficiency that would be of interest. So those are my targets on the upside for NQ. And again, if we get animated through that, again, we have this buy side. Again, I called on that weekly chart. So this fair value gap here, I would expect this to act as inversion. Again, if we're going to remain bullish, I'd want to see us find support here. We can trade as low as the bullish order block, but we should not get below this. If we get below that, then we're going to have to take our attention down to these inefficiencies and again, switch gears to what the market is showing us. And then again, looking at this inversion, fair value gap in here, again, just for more precision. Do you need all these things on your chart? No, but again, this is what gives me that edge that makes what we do here superior to everything else. So inefficiency here on the other side of the curve, we extend that through. Look at the bodies also respecting that. So there's a lot of convergences at key levels for price to want to react there, which is again, that's why I'm doing my buying on these 1 minute charts at these levels. So it's not enough to just see the markets trade to an inefficiency and go higher. You want to see a convergence of these levels. And then in your lower time frames, that's what gives you that precision. It's not just going down to the 1 minute chart and looking for your entry. That's why a lot of you guys get wrecked, because you don't understand these higher time frames. And again, this is why I make my time available to you guys, because again, this is what you need to have in mind when you're doing your trading. So again, we find support at these levels, off to the races. All right, so daily chart for E-mini S&P. All right, I want that to show in the lower time frames. All right. So again, bullish breaker here. I'd want us to be supported in this if we are going to go higher. On the upside, I do like this inefficiency here as a upside draw, assuming we get animated through this high. If we trade above this high and reject and get below this bullish order block, as I shared, then I will look for these discount levels in here. But for right now, we have to trade what the market's showing us, which is higher prices. And again, that's not supposed to be on this time frame either. Hold on. Okay. So yeah, bullish order block. Again, as long as we remain above that, I will be looking for higher prices, more specifically this inefficiency here on ES. Then again, if we get really animated through that, we have this bearish order block as a second target. And then animation through that, we have these clean highs here. But again, for the strength leader, that will be NASDAQ. So looking at the signatures here for this week, again, look at the bodies there respecting the high end of that inefficiency, unable to even do what? Trade down into the midpoint. So again, it's just the same things over and over again on all these assets. So unable to even do what? Trade down to the midpoint. And then again, it left these highs here, here, and here intact. We trade lower on Thursday. What's that doing? Building in more liquidity. And again, toast those highs going into Friday's trading. So for me to remain bullish, again, we have to remain above this breaker and bullish order block. So let's refine this further in our lower time frame. So again, I qualified how this was a daily bullish order block in here. So looking at last week, we'll zoom out on the 4-hour chart. So again, I qualified this to you guys real time, market maker buy model, as to why we would want to take out these highs. And again, just a beautiful delivery. But again, if smart money is going to reprice it there, they're going to make it worth their while. So what is here, 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 and here? Retail sell stops. So they take it lower before taking it higher. Again, retail sees their bull flag, They see their support and resistance. We, as smart money, we see what liquidity trades down into those orders, absorbs those orders, and then reprices higher, which is why I'm going long. So looking ahead to this week, now that we have the context from the previous week behind us, again, that's that daily bullish order block level. And then we have a lower time frame bullish breaker. So all your higher time frame bullish order blocks are bullish breakers in the lower time frame. Man, we're just dropping gems all over the place today. And if you study it and backtest it, you'll see every single one of your order blocks are breakers in the lower time frame. So again, we have this bullish breaker here. So this becomes an intermediate term low. Because it already cleared out the stops here, there's no reason for us to get below this low if we're going to remain bullish. So I'd expect the reaction to occur inside this bullish breaker block and see us rally from there. And then I would expect, again, if we are going to be bullish, I would want to see some type of low materialize in here and then see us aggressively run higher for this inefficiency. These clean highs here, I like that as a draw. Above that, we have this inefficiency. And if we get animated through that, we have these clean highs here. So that's what I'm looking at on the 4-hour chart. So I believe that's all I had to share. And again, just looking at NQ, same thing, right? So we trade lower. We have that bullish order block on the daily chart. And again, in the lower time frame, what's that going to be? A bullish breaker. So that's all I had to cover today. So I think I'll go ahead and get to some questions. Look at the chat, and we'll go ahead and wrap this up. All right, so let me go ahead and get to the questions. So as far as when do you know to stay out of the market? So again, I covered an example this Monday again. So just give you a brief list for your notes. Low probability days are going to form before high impact news drivers. So days before non-farm payroll, days before CPI, days before we expect a lot of movement. We're going to expect a small range before that. Another time to expect low probability, let's say London has a huge range expansion. I'll skip the AM session for New York and just trade the PM session. Non-farm payroll weeks, low probability. We don't like to trade after Wednesday. And then off the top of my head, that's all I can recall right now. And again, after large range days, we typically have small range days. That's something you want to have in mind. But just off the dome, that's what we have to work with now. So hopefully that covers your question there, Lyndon Kasi. Colin, do you use average daily range in your trading? No, I do not. D. Anderson, hi Dylan, watching from Panama. Glad to be here. Awesome, glad to say we got the Panameños in the chat, supporting, representando. Awesome, Anderson. Also Panamanian here as well. So good to see the support. Latrice, you just cleared up SMT for me. Awesome. Michael Miller, how do I become a member? I believe it's a feature, and I think you can only go on it on the computer, I believe. But there should be like a, I don't even know what it looks like. It either says like enroll, it doesn't say subscribe. Join, I think. Join. And if you hit join, you can become a member. It's just $5. It's less than a cup of coffee. And again, it's just to show me that you want your questions answered. I'll go through the chat. I look for the member signature in the chat. And then again, that'll just tell me you want your question answered. And I'll go through that. Because again, it gets to be too much for me to sort through all these things myself. So. Matthew Davis, does anyone hear a clinging noise in the background? I'm not sure, my man. Matthew, this is insane. Wow, light bulb moment. Awesome. Glad it's helpful for you. Lisa, when will we be more informed about your mentorship? So this week, hopefully this week, we will be looking to have our website out. So again, that should give you guys about 6 weeks in preparation for January when it's time to get to work. So I wanted to give you guys plenty of time to get everything ready for that. So I'll have all those details out by this week. I appreciate your patience and your interest, Lisa. Denisha, thanks for the analysis. Another great session. Glad to have you, Denisha. Thank you. AB1, you've made trading more enjoyable. Thank you, Dylan. The same things over and over again. How true. Fools ignore complexity. Genius eliminates it. Proven week in and week out right here. My man. Appreciate it, brother. Hashreet, thank you for your time. Great work. Thank you for joining us. Danisha, hit that like button. Yeah, guys, that helps us out greatly here. Keeps me motivated to keep doing this for you guys. Again, doesn't cost you anything. Just hit that like button on your way out. Helps us out here greatly. Can you maybe make another video or talk about indices, New York PM session? So I do have a New York PM session trading video on my channel, and we've done quite a few live streams in the PM session. So you'll be able to go through that and see what characteristics I look for in the PM session when I'm trading it there. Smart Geeks, great staff, buddy. I'm happy that I found you. Glad to have you, my man. Awesome. Cedric, can you share your view on CL1? Yeah, I'll get to crude oil in a second for you, Cedric. Jay, on ES, 4-hour ES fib projections from the bullish order block aligns with those equal highs, -2, -2.5. Absolutely. Let me go ahead and touch on that. And again, that's stuff I'm doing for my analysis. But again, if I were to get into all those details, we'd be here all day. So yeah, let me go ahead and cover that as well. Absolutely. So there's a lot of different ways again to do fib projections. So again, we see these equal highs, -2.5, and then we see that -3 aligning with that here. So again, how we trade through these levels here will tell me which of these Fibonacci projections I'm going to use. Another one as well that's helpful is measuring this price leg here. So seeing that, we see that -4.5 aligning with these bodies here, with those equal highs, using the bodies, that aligns perfectly. So that's how I use my targets when I'm trading or when I'm using targeting. I'll use those type of fib projections. Absolutely. And then if we look at this here from this week, from this low to this high, look at the -4. Bam, it tagged that perfectly. Or maybe one tick below it. But again, seeing that align with these equal highs here at -4, which is a key. -2, -2.5, and 4 are significant standard deviations. And again, we reprice right into that there beautifully. I think we fall a half a point short of that. But again, that's the cost of precision. So hitting that level there. So again, yeah, I'm using all these things in my analysis. But again, if I were to cover all that here, we'd be here all day. So hopefully that covers that for you, Jay. So let's go ahead and take a look at crude oil. Let me go and take a look at crude oil for you, Cedric. So yeah, we crushed crude oil last week. So again, we got that expansion hitting that bearish order block as we were looking at, and then aggressively expanding for this low that I took our attention to. So all over that, let's go ahead and go up to the monthly time frame. So we've traded down into, let me go ahead and take this off here as well. So we traded down into this monthly inefficiency here and hit this bullish order block, these two down close candles. So if we are going to see continued rally on crude moving forward, I would suspect that we should do it from here, and then we should rally again. I shared my longer term targets, but again, we should not get below this down close candle bullish order block. I would want to see this remain as support. And again, using that monthly fair value gap, that's why that was my target on the downside as well, because we have that inefficiency there. So the market's going to want to reach for that. Weekly chart cleared out the inefficiency. So we, again, crude oil's been on a tear this year. And again, we called that from the 60s all the way up into the 90s. So monster move on crude oil. So we traded down into a discount. So we have equilibrium here, and then we have liquidity in a discount. So the market's going to want to reach for that. So now that we are in a discount, if this market's going to remain bullish, I would want to see us aggressively reprice away from discount valuation. So I'd want to see the market hit these lows and aggressively expand higher. If we start to get animated on the downside, my attention would go to this inefficiency here. But because I'm bullish top down, I suspect we traded into these lows, accumulated these sell stops in a discount. Again, everything has a logic and a rhyme and reason to it. If you're smart money, if you're going to throw these markets and catapult it higher, you're going to want to absorb all the liquidity you can in discount valuation. So that's what I'm seeing here. And again, I'd want to see the market aggressively reprice higher from that if we are to remain bullish. So daily chart. So this daily chart is looking pretty heavy, but again, understanding the weekly chart, if we are to remain bullish, I want to see us get above this inefficiency here. So for the crude oil traders, you're going to want to have this inefficiency on your chart here. I'd want to see us get above this, use it as support, and rally. If we trade into this level, start rejecting midpoint, and we're unable to rally through it, or this up close candle, if we trade into that and start seeing weakness, then we likely will see lower prices on crude. But I'm not suspecting that. I'm expecting higher prices. So I'd want to see us again get above that, use it as support, use it like a launch pad to send us higher. So those are the different scenarios I'm going to be looking for in crude oil for this week. So hopefully that covers your question for you, Cedric. Olawale, thanks, Dylan. For sure, my man. Glad it's helpful. So Amy, I believe I covered oil for you. Dow, again, it's just like the other indices. So I'll touch on Dow real quick. So Dow traded lower. Again, bullish breaker, use that as support with a fair value gap. So why aren't we going down to these inefficiencies? Because there's a breaker. So the market structure indicates to me that we're not even going to do that. So we took out this high here beautifully on Friday as we were expecting. So on the upside for Dow, we have this fair value gap here. And that's what I'm looking for on Dow. If we get through that, close above it, use it as support, then my attention is going to go to these equal highs here. But we'll have to see how we contend with this inefficiency here. So how we trade there will be significant for Dow. Again, same thing as the other indices. We shouldn't get below this down close candle here. If we get below that, then we're going to revisit these inefficiencies in here. When will your COT interpretation of the data be out? So the CFTC did not release the COT data this previous week, so we will have to play it by ear, and my associate is on it. So as soon as we get that COT data out, we'll go ahead and analyze it, and we'll put it into a report for you guys to take a look at. Nia, thank you again. Enjoy the rest of your Sunday. I'm going to enjoy my 10th year wedding anniversary. Awesome, Nia. You enjoy that, and congratulations. Star, YM, and oil. I believe I covered that. Alistair, when do you choose the fib projections or standard deviation? They're the same thing. I get fib projections to see the standard deviations. Earl Garrison, my man, I appreciate the support and the generosity, brother. Means a lot to me. Thanks, my man. Do you ever use the DR strategy by the master? I have no idea what that is. No, it's not something that I use. No. All right, guys. So much appreciated. Thanks for joining us. I do not believe we have any more member questions here. So I'm going to go ahead and keep it pushing. So I hope this was helpful to you guys. Ahmed, lots of concepts paused today. Great learning as always. Awesome. Glad it was helpful, my man. David, as always, you're the best ICT analyst on YouTube. Thanks. Appreciate that, David. Means a lot, brother. Julian. Dylan, nice moment again. Awesome. Thanks for joining us, Julian. Alexander, love your logic. Appreciate that. All right, I think there's one more member question. Jay, ES daily, we have bearish fair value gap above and the OB a breaker. What would you be watching for a reversal inside that fair value gap? Yeah, Jay, so that's why I said on E-mini S&P, I'm going to have to see how we trade here. So again, how we trade there will be influential. Again, the market's showing me it's bullish, but again, how we trade there will be significant. If we trade to it and reject, that tells me something. If we trade to it, get above it, close, use it as support, that's going to tell me something as well. So it's just a matter of weighing all these factors out. And I'll be updating you guys this week in the Telegram. Again, keeping you guys ahead of the curve as usual. So hopefully that covers your question for you, Jay. Eubene, thank you. Thank you for joining us, my man. Curtis, salute, General. Much appreciated. Take care, Curtis. Denisha, have a good weekend and be safe in these charts, everyone. Thanks, Denisha. You take care as well. Olawale, let's be great this week, everyone. Absolutely. Jay, got it. Thanks. Eubene. Member question, are those new glasses? No, man, they're not new glasses. Just when I'm on the computer all day, I got to have the blue light to protect the vision, man. These are the money makers, so can't have them going bad on me early. All right, everyone. So that's going to go ahead and do it for this week. Eubene, take care, my man. Amy, take care. Smart Geeks, you have a great week. All right, guys, take care and have a great rest of your week. Good luck and good trading. Take care, everyone.